Good morning, Forex traders. It's Thursday, October the 12th. Hope everybody's doing good. Had a good night, good day, wherever you may live. We got news coming out. Big news today here in the U.S. It should be a market mover like it was yesterday with the PPI. Today it's the CPI. And then we have weekly jobless claims too, that usually doesn't do anything unless it's off big time. It usually doesn't do anything. So we'll have to watch out. The CPI is going to be the mover, should be today. So welcome to my YouTube channel. First time here for you. Thanks for subscribing. For those that this is live streaming I'm doing. This is my it was 2 weeks yesterday I first started, so I'm a little over 2 weeks now doing this live streaming. I do for those of you who don't know, I do swing trading. I don't do day trading, even though there is occasionally a trade set up during the day, which is a New York session for me. It's 8 o'clock Eastern time here for me. That I do. There's not always a trade every day. If you're a type of trader where you feel like you got to be in a trade and make money every single day, this is probably not the channel for you. There's plenty of those out on the internet, especially the ones doing 1, 3, and 5 minute charts, which I've said this before, and it's the first time you've heard this. That's how I started out. Blew 2 accounts, so I've been there, done that, bought the t-shirt and burnt the t-shirt. So never going back to that again. I finally found something in doing the swing trading on the currencies, which works for me. May not work for everybody, but it does work for me. If you're a full-time trader, I would suggest that this is what you look for, swing trading. The currencies that we have today, going over them, the first one I got here is the Euro New Zealand 1 hour. You can tell from yesterday, the buy, right, that's where I got in, and it's continued pushing up. It kind of went sideways during the New York session, then it's gone up during Asia and Europe session, and now going sideways again right here before this report. But I was taking off half of my position when it got up to here, and now I'm taking off the rest of my position here. You say, why? I say, because this is resistance. This is daily. It's gone at its daily range. That's the extended range for the day. We got up close to that, so I can't get a whole lot more out of that, maybe 15, 20 pips. So I'm willing to take the rest of it off and then look for another trade setup. So that's the one I had from yesterday. So you can see what happened. That's the trades I look for. When my buy arrows set up, they have to be the double ones. Sometimes they're single ones. They don't move as much. And then you wait for the retrace, which is the low risk buy. And then you ride that. The big boys don't buy this. When it pushes up, they're not buying up there to take that out. The Trader Joe, average Trader Joe's, which is me and you, that's what we do, except I don't do that no more. I used to do that, but I don't do it no more. Now I look for the retrace. If it had continued going up, just missed it. Nothing I can do about it. Go to the next currency. The pound dollar is in a 1 hour sell. There was your chance to get in short if you're going short there. When the signal showed up, see, it done the same thing. It went up here to the resistance yesterday. Went up and touched close to the extreme, and then it stopped and it sold off. It just hadn't dropped off yet, but it's going to move today since it's tied to the dollar because of the CPI report. So keep an eye on that. Aussie dollar 1 hour sold off from yesterday. It made a move down, retraced a little bit, but there really was no chance to get in. You had a little spike there, which you might have could have got in, but those get taken out a lot. they'll go down some, then they'll come back and retrace it and take it out. That's what I'm hoping, and with this report that could happen, but it could also blow to the downside, depending on what the report says. So that's the Aussie dollar. The euro CAD kind of went sideways during the Europe session, and it's pulled back just a little bit. Nothing to do on that. CAD yen made a 1 hour sell, nothing to do on it. Odd yen's made a 1 hour sell. It's ran down. We need a pull back up to get in it. If it runs away, it runs away. Nothing to do on that. The pound Aussie. I've been in this trade, moving it up, and this was a longer term trade. Expecting it to go to 193, close to it. Pound CAD. It had made, let me show you this move. There was a gap up in here. I bought in here, expecting it to go fill in the gap. It did go fill in the gap yesterday, punched up a little bit higher, and now we've gone back down to the gap. And I got out of that position when it filled the gap. So I could have got, a little bit more, maybe 10, 12 pips. But I'm okay with that because I was in down here, had already taken off half the position, closed the rest of the position there. So now I'm looking for the rest of the trade. Another new trade, should say. Pound yen made a 1 hour sell signal. You could have had a couple opportunities to get in short right there. Made a little push down. Don't think it was enough to get you the 77 down to 52. No, it didn't. So it went the 23 pips. That's what I talk about when it goes 24, 25 pips, something like that, and then it starts to retrace that whole amount. There's a chance that it's incorrect, and it may not be the time for a sell yet. I already showed the euros in. New Zealand, the pound New Zealand did the same thing. There was a chance I couldn't get in that. That was at 5 o'clock in the morning. I couldn't get into that, but it's done the same thing as the euro New Zealand, except it didn't really go sideways. It's going up. And it's trying to make a 1 hour sell signal, which nothing to do on that yet. New Zealand yen, let's see, that's the 4 hour. See, there was a sell. It came back up to the sell, and I was trying to sell off. But with this news, we're not going to do the Japanese yen. We got to keep an eye on that and make sure it doesn't get above 150. I'm in it short. I got in 148.90s. I'm willing to get in it at 149.90s when it pulls up to there, and it could on this report, depending on what it says. It's in 149.15 right now, so that could push it up depending on what that report says and give me a chance to short it some more. You say, why are you shorting the dollar yen? Because the Bank of Japan has stepped in once. All they did was send a message. It wasn't the real move. They just sent a message that they wasn't going to have it up that high. I done made big money on that once. I'm looking to make big money on it again once it gets over the 150s. I was looking for a close above 150 though, and it didn't do a close above 150. It just went above 150 about 16 pips, and then they drove it down over 300. That wasn't the real move. The real move would be anywhere from 5, 6, 700 pips. That was just to send a message. The New Zealand yen, back to it, the 4 hour, back up the sell. It's made a 1 hour sell signal, so those are in agreement now. And it has drove down, but not a whole lot, but it is tied to the yen, so that they can drive it down too. Excuse me. Euro yen made a 1 hour sell signal. It has started selling off. but it's not made its daily range, but it could if it comes down here. The sell is good, continues. Euro Aussie made a buy. That was on the 10th, so that was that was the 9th, on Monday, late Monday night. And Asia, late Asia session, closer to the Chinese session. And you had to get in right there, because that would have been within my parameters, which is 30 pips. That low is 64.44. That low is 64.87. So neither one of those or that one was within. They're more in the mid 40s, close to 50 with the spread. And that's two that messes up the risk. Now, it did work. It did work, but it doesn't always work, because the risk would have been too great, because that low is 66. That low is 44.22. So that would have been the opportunity right there to get in. But again, that was around midnight, 1 o'clock in the morning, when I'm in bed, and it's already made its move up. So you can't chase it. You just missed it, you go to the next one. The Euro Aussie is coming up on daily range resistant right there. That's extreme range right there. So we're getting close to it now. Depending on what this report says, it could push it up in here and be an opportunity for a sale. We have to watch that and see. Report's going to tell us a lot. And that was it for today on those, going over those. Hope everybody's doing good. If you're in trades, because we're getting toward the end of the week, and you're still in a trade, move your stops up, but not too tight. You don't want to do this, you get in, you follow it up, then you put it up in here, and it shoots up again. You go, okay, well, I'm going to put it up under here, and then you get stopped out, and then this happens. So if you got in down here, which have been a low risk trade, at 44 is the low, that was 64, so that's 20, plus the spread, which is 3, which would be a $23 risk, and you should have got half your profit off. And you should have had to moved it up. Your stop originally, when you entered there, your stop would have been there. And on this push up, then you could have moved it up in here. So now that had made some money. But it didn't, it would have stopped you out. And then you had another opportunity, a second one, with a little bit more risk, 66.22. That'd been 25, 26. So it'd been a little bit more risk, but then you got this, and you could still be in it. You already took off half your position. Now, when I say half, that's just me. That's just me. You're welcome to take off whatever you're comfortable with, whether it's an eighth, a fourth, a third, 3/4, whatever you feel comfortable with taking it off at. You have to figure that out for yourself. Over years and years of trading and testing, that for me, the half is the best. You say, why do you take it off at? Those numbers, they're all different. They're never the same. Some of them you have to take off because of the smaller trading range at 30, sometimes 35, depending on the odd yen, CAD yen, New Zealand yen. But the bigger ones, the Euro CAD, Euro Aussie, Euro Yen, those are going to be more at the 40 and 45 range. Sometimes you could do the 50, but then the Euro New Zealand, the Pound CAD, Pound Aussie, Pound New Zealand, Pound Yen, all of those are 50 to 60 where you can take them off because of the greater range. And that's just the first part of it. So it takes the stress off when you do that, because you've banked money, and you've also have been up. When you take profits, you move it to your stop to break even, and maybe even $1 or $2 on it where it's going to make money, and you know you're going to make money regardless. And if it continues pushing up, then you just keep moving your stop up, and that second half continues to make more money, and usually makes more money than the first half. Not always, but most of the time. This is my full-time job, trading. Has been since 2007. So I'm going on 17 years of trading just this. The same currencies. I don't look at the gold. I don't look at the euro dollar. It doesn't have enough range. It's too whippy too, because the spreads are nothing, so they just jack it around. Stop has to be wider because of that. I don't trade the Euro Swiss, the Aussie Swiss, the Odd CAD, the New Zealand CAD, New Zealand Swiss. I'll only buy the New Zealand Swiss. I won't ever sell it. And reason of that is that you get paid for holding that position, because the interest rate, the New Zealand dollar is a lot higher than the Swissie's interest rate, which is actually a little negative. But you get paid for that trade, but you have to wait the setup, because it does not move. It moves at a snail's pace, the New Zealand Swiss. And the New Zealand yen's the same way, but I do trade it, because if you buy the New Zealand, you're selling the yen, so you're getting the interest rate overnight when you hold it. It's not a whole lot, it's just pennies. But all that adds up. So I can't do anything on those. For those of the first time here, say what the indicators are here. These green dots is just parabolic SAR. That's all it is. You can get those anywhere. MT4, Interactive Brokers, whoever you trade with, they're probably going to have that, because it's just a basic indicator. That green line right there is just a EMA moving average. You can get that anywhere. These blue and orange, or light blue I should say, and orange arrows are just trend following, and those are based on the 1 hour. If you're 1 hour chart, 4 hour, it'll be a 4 hour chart. They'll change. You can get those anywhere. They may be a little bit different on the settings on some, which I've had to change mine a little bit on those. And these are what I come up with down here. And the two arrows right there that you see is ones I created. Well, I mean, I come up with them, but I don't know how to write that JavaScript code. A friend of mine that works in that field knows how to do that stuff, and I got him to do that for me. But it took us a little bit to get to where I had to tell the computer what I wanted it to look for. So we're looking here for any possible opportunities today, and basically got to wait on the CPI. Now let me make sure, because the jobless claims, weekly jobless claims, comes out in about 10-11 minutes, and you can go to Forex Factory, and that's where you'll get the news from all the countries. For their reports and news, they have news about the other countries there too. Well, there you go. Well, because it's raining here, there's the phone is slow at pulling this up. But I know the weekly jobless claims are at 8:30. I believe the CPI is at 10, if I'm not mistaken. Yeah, the rain is actually banned at 1 bar. because of the raining. There we go. We don't want Monday. We don't want the week. Put it on today. No, the CPI is at 8:30 as well, so both of those. Oh, because there's oil inventories at 11 o'clock Eastern time today here in the U.S. And the Euro's got at 7:30, which has been going on for almost an hour. ECB monetary policy meeting. Sometimes it really doesn't do anything. But the CPI here in less than 9 minutes and the weekly unemployment claims, those are going to move the market. So we'll check and see what's going on. So I don't really see anything, except you do get a sale, but with that report I wouldn't want to take that right now. It's a flip of a coin, as is the Ollie dollar. It's already drove down. If you got in on that spike up, you see your risk was 64.45, 34.11, about $14 risk if you got that spike up. But I've seen these get take out. Most people say, well, that's a hammer, it drove it down. Yep, it did drive it down a little bit. Then it retraced it back up. And that report could send it back up here to take out that hammer and possibly that high. Now if it came up in here into resistance, which is right there at that signal, then after the report, then we could look for a sell opportunity. Lower risk trade. But gotta wait on that report. Euro CAD not really doing anything. CAD yen has made a 1 hour sell signal, but nothing to do on that. That's it. My setup's not there. Odd yen's in a 1 hour sell. It's trying to push down a little bit. Really didn't get a chance to get in. That high was 82. And that high was 66. So it's 16, about $19 risk. You could have got in there. If you got in at 66, it's pushed down to 54. So you only got $12. With that report coming out, kind of risky. It could drive it down. A pound Aussie. It made a 1 hour buy. I would love to see a pullback back down in here. That's probably not going to happen today. It's too long away. But it's coming up on resistance up in there. Push up. Now if it does make this push up into here, I may take the trade off. The whole position. Pound CAD went up to resistance yesterday and has sold off some, but it's still not gotta wait on the report. Is less than 6 minutes. Pound yen, same thing, made a 1 hour sell signal. Euro New Zealand still trying to push up a little bit, and it's getting up into extreme resistance up here. So I took mine off already from yesterday when I got on it, got down here, because I happened to be, it was fortunate that it happened to be while I was still up. As I look at these in the Asian session and into the about when the Chinese come on, I think it's 10, and then I go to bed, because I would get that and went immediately, put my stop loss in, put my first target profit in, and woke up the next morning and hit the profit target. So I started moving my stop up, and then when it got up into here, I took the rest of the position off. Because it's at resistance, we got a major report. It could blow up through there before we get a retracement. I hadn't really had much of a retracement, so could get a retracement back down into here somewhere. If the news is bad, could push up first, because they're not buying this. The big boys are not buying that, just like they didn't buy right there. They drove it down. Well, hey, we want the better price. They want the better price, they're going to drive it down. Now the market makers are going to push it up, make them think, the average Joe, oh, it's going up, I got to get in. So that's where we get in. Mistake. And a lot of people call that a breakout buy. Well, that might go 10 or 12 pips, and that's what average Joe takes, is 8 to 10 pips every trade. As they get too excited. Less than 4 minutes for the report. I'm on, for those of you who don't know, I'm on Monday through Thursday. I come on at 8 o'clock Eastern Time, U.S. Usually stay on till 10:30, sometimes 11, depending on what's going on, if there's an opportunity for another trade in there. And then I look at it again late in the afternoon. This for the same thing. See if I have to move a stop, move a target, profit, potential trade. Then in Asian session, not on there long, but 30 minutes. In the Asian session, do the same thing. Sometimes I'm on there a little bit longer if there's big news coming out from Australia or New Zealand or even the Japan. And I watch it for a little bit longer because there could be an opportunity. Less than 3 minutes for the report. See if they're giving any indication. Pound dollar trying to push up. And I think that it probably will. That means the dollar would be weak. Aussie dollar, we'll see what that's going to do. CAD yen, again, it made the 1 hour sell set. There's nothing to do. There's no setup. No setup. No trade. Aussie yen. Looking for, if we're going to sell, got to look up for a push up into there, but the range is not there. The daily range, so it could drive up. Because that's daily resistance right there. And there's the extreme resistance up here. It could go up into there. Less than 2 minutes for this report to come out. If you'd hit the like and subscribe button for me, I'd appreciate that. It would. You'll also, to be able to get notified, you're going to have to hit the subscribe button, and you're also going to have to click on the notify me button that YouTube has, and then it will alert you to when I'm on live. I also record these videos for you that want to go back and look at them, or if you miss parts of them, got in late, they'll be there. It's usually after 12, 1 o'clock Eastern Time, sometimes a little bit later. But these live recordings take longer to get put up than the because I have regular videos too. They're not live streamed. They're about 150 of those. So here we go. We got to see. We're going to look at the pound dollar. That's going to tell us a lot, and we'll look at the U.S. dollar, Japanese yen. Because if the dollar gets weak, it's going down. Right now it's going up. It's already going up about 20 pips, and the pound dollar is going down. That was in a 1 hour sell signal. But yesterday, this is what they done. They spiked it down, and then they turned around and it went up. It was right here. That's what happened. They spiked it down on the PPI report, and then that's what happened afterwards. Trying to do the same thing. So the dollar yen is trying to climb. It didn't spike though like what I thought, but when the New York session opens, they could, in an hour, they could drive it up. Or they could do like they did yesterday. After it spiked up, they drove it back down. And that was the dollar yen. See anything else? What the Aussie dollar do? Same thing. It's gone down. It was a 1 hour sell. That was your only opportunity to get in right there. And that would have been tough because that was a news candle. Been tough to do. You might have could have got that one. Pound yen. Doing the same thing it did yesterday. They spiked it down and they turned around and it ran it up. Or will they do it again today? Today's a new day. Euro yen. It was in a 1 hour sell. Not really a chance to get in. I guess you could have got on these. Any of those or even that spike up. We'll go to the 4 hour, see what it looks like. And it's just made a sell signal. So not really nothing to do there. We'll go back to the 1 hour. And see what's going on here. CAD yen. Look at that. That's an ugly candle, ain't it? Aussie yen spiked down. Now you'd be in profit if you was able to get in. If you got in there at 60, I think that was 66. Yeah, the internet's dragging a little bit because of the rain today. Okay, 66 down to 29 basically. That's 37, so you would have got your 35 pips on that odd yen, taking off half the position, moving your stop to break even. Because if it comes back up and now it retraces that 30 pips, then the chances are that it's probably going higher. And it's going to stop you out. So the Euro New Zealand, what did it do? Spiked up. See, it spiked up there to touch it. Now that's a yearly pivot. That yellow line right there. It goes all the way across. That's a yearly pivot. That's major resistance right there. Went up and touched it, and it sold off from that point. But because of this big move up without no retracement, we were kind of expecting a retracement of some kind. Possibly back down into here today. Somewhere in there. If anybody's got any questions or comments, feel free to do that. You can also do it if you don't want to do it in the live chat. You can also do it on my YouTube channel page. It's on there too. I've had last night before last, I had 2 comments in there that needed more trading action. And so that tells me that they are looking for 1, 3, and 5 minute charts. That's how I responded back to them. Yeah, if you're looking to get in a trade or force trades every day because you got to pay bills, so you have to make money every day. Yeah, I sent them to other YouTube channels where they're 1, 3, and 5 minute traders, and good luck with that. Like I said, I have been there, I have done that, bought the t-shirt, and then I burned the t-shirt. I blew 2 accounts trading that way, so thank God I found this, because this is what got me retired. Well, not retired, because I'm actually working, but I'm working from home, but doing this. This is my job, trading. Because I had a job, and in 2006 started making pretty good money doing this once I created the system into 2007. And then later into 2007, trading this way, the way that I do, this strategy, I started making more per week than what I was making on my job. So I told my wife, I said, why am I getting up at 5 o'clock in the morning every day? So she had enough faith and trust in me and agreed, let's do this. She was still working at the time, full time, but now she's not, because I told her that was my promise, that once I got to a point to where I was making as much as both of us put together, it was time for her to come home. Now, if the truth be told, she's probably not too thrilled being here all day with me, but she does other stuff. She got hobbies and everything, so. And then we have other friends of ours that's a little bit older than us, and they're retired now, both the husband and wife. And see what the pound dollar is driving down. There was a 1 hour sell signal. That was the best opportunity to get in. And you would be taking off half a position right now. That high is 23.13. And let's see what this low is. 23.13. The low is 59. So that's 41.30, 54. Okay, so you've taken off 40 pips, which is on the pound dollar. Half, you should have taken off half, third, fourth, eighth, whatever you feel comfortable with. And now you're trailing. Now your stop, which was if you got in here, your stop was there. Now that this has happened, you can now move your stop down to right here. And now the second half is going to be in it, because now that's a big down candle of 50 something pip. If it retraces that, it's something wrong. It means chances are it's coming back up. As long as it keeps pushing down, you keep following. That's a big candle though, so you're not going to be able to move your stop loss for a while. But your stop loss, if you've taken off your profit, first part, your second part is going to make money no matter what. Now, doesn't that relieve stress, knowing that you've already banked money, and on your first part of your trade, you're still in a trade. You don't have to hunt for another trade. Now you're just using money management and controlling the other part in which you're in. So you don't have to look for another trade on this one. Now you can on others if they set up. The Aussie dollar, that's wound up being a good move. So the dollar is strong today. So what does that mean for the dollar yen? See, now it's up into the mid 40s. So they've pushed it up 30 pips since the report. But the New York session has not opened yet. Let's see, New Zealand yen. I drove that down too. Go to the 4 hour, look at that. So that was the poke ups right in there for another sell opportunity on the 4 hour, and now you're in the money on that thing. So you're on New Zealand. It's a 1 hour candle, right? Pound yen is selling off too. Those really are all opportunities to get in, but now you're in the money and you're able to take off half the position. Because this is 50 pips away as well. If you got in there, it's 77. It's down to 12. So that is 60 something pips. You've taken off half your position. If you got in there, your stop initially was there. Now you're able to move it to the high of that candle. So the second half is going to make money as well. I see how we close. See this yellow line? That's a yearly pivot. We came up and touched it. We closed above it. Now we're coming back to retest it. I'd be careful right in here because it could be a retest and then it starts to go higher. Because that's important. Very important, that yearly pivot. Because it was resistance. Went up and hit it, drove down, closed above it, and went up higher. So now that is support right there. So be careful if you're in the pound yen sell. But you should be in profit already on your first half, and your second half is going to be in profit as well. If you want it, you can always take it when it comes down and touches that and just close the position. Knowing there's going to be some kind of resistance right there. The yen made a poke down. Let's see what the 4 hour looks like. Would have liked a retrace for a sell. That's going to do one or two things. It's either going to drive back down here and fill in more of that wick, and then there's going to be a buy opportunity up, or this is just going to be a slight retracement and it's coming back up to the sell up here. Because there's not been an opportunity. That was your only opportunity to get in, and the risk on that, because that's a 4 hour, is too extreme. So it needed to be up into here. CAD yen, that's an ugly signal. Ugly candle. Euro CAD's coming down. And that should be a sell on that, probably pound CAD sell too. See, so I done the right thing. I got in down here toward the top of that second candle high, and expecting that, of course that was my stop down here, but expecting a gap fill, which it did yesterday, and I got out of the position. Now it went up a little bit more, but I was expecting with it up in here resistance, and you see what's happened. It's wiped out all of that, and right in there. So is it going to come back into there where it got in? There's no buy. That's not a buy arrow. Those are just trend following. And on 4 hour they're different than the 1 hour. Well, this is a 1 hour, so that you see what they look like. So those look pretty good. They're still driving that down, but the New York session doesn't open for 45 minutes, so this could actually change in reverse. But it could be a retracement up, where the big boys want a lower risk to get in to drive it down. Euro Aussie made a spike up, so it went above the resistance and it sold off. It's a 1 hour candle, still got 15 minutes left. Pound New Zealand spiked up, looking for a retracement on that, and the Euro New Zealand and the pound yen. So let's look at all these. On the 4 hour, so we'll switch these to four hours. It ends in 9 o'clock Eastern time, so that's less than 13 minutes. There'll be a new 4 hour candle and a 1 hour candle. So I've got to keep up with the dollar yen. I don't think it's going to creep up. It's still gone back down a little bit. But the New York session is going to tell us what they're going to do. What they're going to do. The euro dollar sold off. It's back below 106. See, there may not be a trade on today. There may not be one set up. Okay, see now my pound Aussie went up to daily resistance and it's trying to sell off. So we'll see. Went up to 192.40. I was expecting it to come up into here, so I'm going to move my stop loss now on it up underneath here, so it shouldn't go below here. It's coming down, but if it does, then it's probably coming back down to here. As both the pound and the Aussie are selling off. Let's see. Leland yen down, found support down here. Let's see what that looks like on the 4 hour. Check that out. Keep an eye on that too. If anybody got questions or comments, feel free. Put them in the chat or the comment section on my YouTube channel. Either one of those is fine. I usually get to them pretty quick, unless you ask it, while I'm sleeping here in the U.S. and you're in the overseas and it's daytime for you, then I won't respond till when I get up the next morning, so there'll be 6, 7, 8 hour delay before I answer your question, but I will get to it. So I don't know if there's going to be an opportunity today here or not. Could be a sale opportunity on the New Zealand yen with a retrace. And the Euro yen is selling off. And I'm going to look at the 4 hour. It's trying to make a sell signal now. So this is a 1 hour pound Aussie. That would have been your chance to get in. Let's see what the risk would have been. The low is 190.46. That low is that can't be 62. That's 16 plus 4 on the spread. That was a $20 risk, and that happened about 2 o'clock in the morning US time when I'm sleeping. That's why I seen this stuff, but had to wait till the next day, which was about 6, 7 o'clock in the evening, and was able to get in. Now I was expecting this to go to 193, close to 193. It's gone up to 192.40 and has failed at the resistance right there. Now that's daily range resistance, and has tried to sell off once it got up there. So I've moved my stop up underneath these now, because if it takes that out, it's probably going down to here, which would be close to where my entry was. So I'd like to see it push up. Now this is where I would get out. If it does push back up here today and goes up a little bit higher into here, I'm getting out, closing the position right up in here. And I've got half of that off, and the other half is going to make money, good money. Because from being in here to here is a good distance. Well over 100 pips. Well over it. But we got to keep an eye on all this stuff. Euro Aussie. Made a poke up into there in between them. Could have a sale coming. Because the Euro's weak and Aussie dollar's weak. So that's why both of those are coming down. Pound CAD. Made a big spike down. Look at the 4 hour. See how on the 4 hour it's different, the trend following. And short term, because that's 2, 3, 4. About 24 hours. And following up. The New York session doesn't open until 35 minutes. So there's nothing to do. We're waiting on setups. May not be none today. I gotta check the dollar yen. It's in the 149.40s. So it's still a good distance. Could they drive it up today and the Bank of Japan steps back in? Have to wait. The New York exchange is going to be the only one that can push it up because the volume when it opens. So it's not going to happen now. Not enough volume, even though Europe is still open. So we got to see what's going on today. Wasn't good. Oh, there wasn't one. That's why. That. I don't know if this is going to let me squeeze back a lot or not. So what are they doing on it? Still in the 40s, nothing to do. There'll be people who force trades because they feel like they gotta get in and they gotta make money today and pay bills. I say this every video and live stream. If you have to do that, please don't use money trading that you need for paying mortgage payments or rent or car note or clothes and food for the kids. I would advise you to stop yesterday trading if you have to do that, because a lot of people feel like they got to pay the bills. They want to be able to trade at home. So they feel like they have to make money every single day, which means that you don't have enough money put aside to where you don't have to trade every day. I don't get a trade every day. Sometimes it's even 2 days or even 3 days because I wait on the setup. I have to wait on the setups and it takes a little time. But when it shows up, trying to see, what is this, a pound CAD? Let me see if I can scroll backwards. There's a buy there, but it ran away. You didn't get a chance to get in. I don't know that it was there on the 4 hour either, but I'll look. Now that's a ways back. That is a ways back, so yeah, the 1 hour, it ran away too, so it has not made a retracement back down here, and a lot of times it will. So this could be the start of the move down to there for the pound CAD. Spread it out a little bit. I don't know what y'all think about that. Kind of small. I think you can see it's a little bit bigger picture on there. Let's see, there was the sale. That was the Bank of Japan where they stepped in. You see what happens. That wasn't a real move. That's just to send a message. It went down to it, went below it just a little bit, took out the wick, and then turned around, and it's come back and gone back to that wick. So it stayed within that range from last Wednesday, so it's been over a week, that move right there. And now here we're going down again. So I have to look at these when it takes that out. Could be a retracement up here. And that could be if they're wanting to sell it off. New York Stock Exchange, the big boys, they're gonna have to get it pushed up into here and then sell it off, because they're not going to sell down here. Now they may be looking for a buy, and the market makers will drive it down some more to give them the better price, and then they turn around. But this is in a sale right now, because it came back into the sale, low risk trade, and now we're selling off. So, anybody got any questions or comments? Feel free to send them in the live chat, or you can go to my YouTube channel, and the comment page is up underneath the videos. I'm recording this as live stream, so I'm recording it, so if you miss anything, if you're just getting here, you'll have the opportunity to go back and watch what you missed. I usually have those up, 12, 1, 2 o'clock Eastern time. Most of the time it's after lunch, a good bit closer to 1, 2. I come on at 8 o'clock Eastern time, Monday through Thursday. And I usually stay on till 10:30 or 11. Some of them for about 2.5 up to 3 hours. Monday through Thursday. Fridays I don't trade. I look to see if there's setups, which a lot of times there isn't, but sometimes there is. And then I look to see if I need to move target profit or move the second half of my position, or move the stop loss. And that doesn't take long to do all that, about 30 minutes, 45 maybe. And you may ask, why don't you trade on Fridays? I don't know if you notice, if you go back, you can easily find the volume on futures and stocks and options, and it's drastically lower. So what happened between Monday, Tuesday, Wednesday, and Thursday, and Friday it changes? The big boys aren't there. They're the ones that push the market. Market makers control Fridays. They do stop running. Mondays is setup day for the week. So they're either going to drive it down to turn it back up, or they're going to drive it up to run it down for the week. So I'm not there on Fridays except for a non-farm payroll here in the U.S. Because that's a big market mover. But it does make a big, after the report, before the report, that 1 hour candle is usually huge, and it usually stays 90% of the time within that 1 hour candle that it made the rest of the day, so there's no reason to trade that. They just let the average Trader Joe's, which is me and you, fight it out. So if they're wanting us to do that, then I'm staying away like they are. Trying to follow their footsteps. I don't want to follow the average Trader Joe's, which there's a lot of them out there on the internet, a lot. As I'm sure most of you know by now, if you've been trading any time, that the average trader loses 95% of the time. So I try to stay away from what those 95% were and do what the 5% do. And they use 1 and 4 hour charts. The brokers and the analysts, they don't use these measly 1, 3, and 5 minute charts. So if they're not using it, there's a reason they're not using it, so I want to follow that. Because I've done the 1, 3, and 5 minute thing. That's how I traded, because I felt the same way. I felt like I had to make money, had to pay bills, So with force trades, get in at bad places. Yep. Get in like up in here, push up a little bit, and then now it's against me, and I'm fighting for my life, saying, hoping, please come back up here so I at least get out at break even. Didn't like that feeling, so I got away from doing that. So now the way I trade now, which is swing trading, I can sit and wait on these trades. And I'll show you the example for those of you in here. That's what I wait on right there. See how it ran away? Now the average Joe would be, oh, it's going up, going up, going up. I got to get in. So they get in, goes up a little bit, but then they're trying to get out, and it keeps going down from where they got in, and they can't take that because they see it going against them. The dollar sign becomes negative, taking money out of their account. So I'm not chasing that follow. The big boys ain't taking this. They're not taking a breakout. They're waiting for this, and then they're going long. And then the average Joe comes in, okay, well, it takes it out. I'm taking the breakout, and I'm going long. Well, look where they got in. They've already made a ton of money, and you're helping them out by driving up here instead of following what they do. But everybody has to be entertained. Well, most people, when they're on the internet, so they got to have the music, they got to have all kinds of stuff going on to keep them tied to their channel. So they have to keep them coming back. But I want to be able to teach trading. I don't want to entertain you. That's what your phone's for. Is what most people think. I don't have to have my phone to be entertained. I like talking to people, cutting up, and having a good time instead of my phone telling me, okay, now you can have a good time by watching this video. So that's a perfect example right here. If you didn't know, this is what I look for. Wait on it, wait on it. Had to wait a day and a half to get in. And I think there was another opportunity on here, correct? Let me think. Pound dollar. Probably have to scroll back. Whoop, wrong way. I know there was a buy in here. This has got to come back. See, there's no retracement. It's got to come back in here. So they're trying to drive it now. So we'll see. Was there a New Zealand yen? 1 hour. There's the sell. There's your opportunities to get in, and now you're in the money. But you have to sit and wait. See that the arrows showed up there that you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours of waiting. A lot of people can't wait that long. They go, I gotta make money today. I gotta make money today, and I gotta make money tomorrow. Well, if you're patient, you make your money. There was a buy in here too. I know it's been a way back because the 4 hour. There was the Bank of Japan right there, but that's not. I don't think this one goes back far enough. Enough data. My euro yen should have enough data, but I got to get past that. That's the Bank of Japan again. That was just to send a message, and they're going to be sending another message. Just don't know when. As long as we continue to climb up to the 150, which we're up at 149, pressing 150. So I'm going to see if I can scroll back to get past the Bank of Japan first, which is right there. There's your sell, and see, you'd have had no opportunity to get in, but here was your opportunity to get in where that last sale was. But I know there was a buy in there before that sale. There it is right there. And see, it ran away. But it has to come back. And it did come back a little bit, and then the Bank of Japan stepped in. I'm going to switch it to the 4 hour. Let's see if the pound dollar, see, it made a 1 hour sale. There's your opportunity. That was at let's see, it's 9, so that's 3 o'clock in the morning. You're up session. And you'd be in profit now on your first part if that's what you wanted to take. I don't do breakouts or breakdowns. I don't trade those. And let's see. Oh, keep going the opposite way. You had breakouts in here, opportunities. You had one right there. You got a little bit. It came back down to where you got out, and it went pushed up a little bit more, but then you got wiped out. Let's see. There was a breakout opportunity, I guess, right there. Probably got in somewhere in here. And it went up some, but then it wiped you out. This is going to let me scroll back. I don't know how far it's going to let me scroll back. That was a long sale. There was a buy. See, if you didn't get in on that candle, ran up, you think it was running away without you, but then there's your retrace, and there's your real move. Low risk trade, low risk trade. If you got in that, you got half of your position off. Second half even made money. Then you got stopped out. Come back in. You buy it again on the buy. And the first half you made money. Second half you really moved. Especially when it made this and it made the push back up. You were able to move your stop right there. Because see, there's support. If it breaks that, which it did, it's going down. So you made money on the first half, even made more money on the second half, and you had a low risk trade to start with. And there's the sell. There's the sell signal. There was your opportunity to get in, low risk. Same thing, when it drives down, you're taking off profit, and you're gradually moving. When it makes a push down, and then you're able to move it from there to there and keep moving it down. And when it made the pushes down here, like to that. Made that push down. Should have moved your stop to right there from all the way up here. See how much money that made? It should make more money than the second half. If it's going to work, it's going to make more money the other half of your position than the first half. So it just went up a little bit, then a little bit higher, but then it crashed and stopped you out. So no need to be greedy about 10, 12 pips. No need to be greedy. This was news right here, and it drove down, but there was no chance to get in too far away on that one, I believe. 25.65, and that low. No, actually it's not. $21 risk, or you could have got that one. The same thing. When it poked down, you get in, half the position's off, you're moving your stop. When you don't move it until it makes that push up, then you move it from where you had it at break originally there to break even after it does this. And then when it pushes up, then you're able to move it to here, and your entry was down here, so now that's made money. And then it crashes, gives you a second opportunity with even a lower risk, and taking off half the position. You wait for the retracement, you wait for it to push up. Once it does that, now these are 1 hour candles, so it takes a while. You have to be patient. And when it does that, now you move your stop. You got in there, the entry, there was your stop initially. And then after it does this, you took off half the position in here, does this, pushes up. Now you move your stop from here to here. See how much you made, and you keep moving it up. And you have to wait on this to show up before you can move it from here to here. And actually with that big long candle, I'd move it up under that one. Because if it takes that out, it's going lower, which is what happened. So you'd have been getting out somewhere in here, first half. The second half, you'd have had your stop up in here, from there to here. So see how it makes more the second half. And once it made that candle up in here, and your stop's there, because that's such a huge candle, you figure there's going to be a retracement, so you can move it up under that candle after that one formed. And then you got stopped out and it crashed. But because these are 1 hour candles, you have to wait several hours before you can do that. Most people aren't patient like that. Most traders are not patient. That's one of the things you have to learn, is patience. Get rid of the greed, be patient. Let the trade come to you. If it runs away, it runs away. There's plenty of others here to look at. Oh, let me check on. We got less than 11 minutes, and the Japanese yen is trying to push 149.50. So, but the Bank of Japan is not going to step in until it's back over 150 again, and it could be that they're not going to do anything until there's a close on a daily basis above 150. So I'm already in a short position from 148.90s. If it pushes up to 149.90s today, then I'll add another position. And I set my profit targets at 300 and 400 pips. And of course, if it gets up into the 150s, it would be a 500 pip profit target. So just that one trade on those, because I know it's coming, just like I knew the other one was coming. I just don't know when it's coming, so we have to be patient. You know, I got in a trade a month and a half basically, and had to wait. But there were people coming in the room telling me, said, we're long the US dollar when it's pushing, getting close to 150. They said, I would take profit if I was you, because they're going to come in and smash it down. But all they did was a smash, send a message. It wasn't the real move. They just went 300, a little over 300 pips. The real message would be 5 to 6 to 700. And it's going to take a long time, months and months, to recover that, to get back up there, if it gets back up there. Pound dollar still pushing down. I don't know that there was an opportunity on the 4 hour, maybe. I mean, there was a poke up there on the 1 hour. But nothing yet. We got less than 8 minutes, and the New York session will open up. Looking at the New Zealand yen, they're still driving it down. See, that was a good trade right there. But that was at midnight. See, I wouldn't have missed that. I hate that, because that would have already made money. But it would have been a low risk trade, which is what you look for. So that's a yearly pivot, which is support right now. So you'd expect it's going to come back. See how it ran up from it, to come back and retest it, and we may get some movement there to the upside, or it could crash right through it. But it's getting at its daily range for the day. So I would expect some kind of retracement right down in here. I could go a little bit below it, poke below it like what it did there. But on the 4 hour, it looks like that's where they wanted to sell. Came back up into here. So we'll see how that goes. It could push up back up into here. And that's what they would want, is a retracement back up, if they're going to sell it back up into here and then push it down. So retracements are good things. They're good. Even though they may go against you, it's a good thing. You see, you wanted a retracement right there to push up into that, so you could get in short, low risk trade, and then you get into that. Otherwise, if it went straight down, you never chance. You missed it. You missed that opportunity. We got less than 6 minutes before the New York exchange opens, and the dollar yen is still hovering a little bit below 149.50. I'm not looking for anything. Oh, can I go refresh my coffee real quick? I'll be right back in just a second. Before the New York exchange opens in 5 minutes. I'm back. Let me check on the dog real quick. Okay, I'm back. Let's see, take care of that too. And how close are we to the New York session being open? Less than 3 minutes, yay. Less than 3 minutes. Those of you who's on here for the first time, I do swing trading. There won't be a trade every day. Sometimes there is, sometimes that there isn't. So I have to patiently wait for my setup, which is, I'll show you an example, is right here. When my signal shows up, the retracement back in to see how it ran away. Probably couldn't have got in that one. The risk is too great here. Ran up. Average Joe trader thinking, see this big candle making up, I gotta get in, it's going away without me. Well, it didn't go away without you. A lot of times sometimes it does and you just miss it and go look at something else, but this is what it does. You come down, you get your opportunity, and there you go. That's my strategy, waiting on that. But I have to wait for the signal. If the signal don't show up, there's no trade. That has to show up. And then I have to wait. These are 1 hour candles. So you 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20 hours. Almost a full day you had to wait. So those who trade and feel like they have to trade every day to be able to pay the bills, which I advise against. We do demo trading till you learn how to do it. You have to wait, and then you get paid, and that makes up for your waiting. Instead of trying to, oh, it's taking out this high, it's going. Yeah, you made a little bit, but these are 1 hour candles, so it's not as big. That's your big move. And see, went up to resistance, which you could look to take off, because there's going to be a retracement here, somewhere in here. It's time for the market. Yep, it's open. New York Exchange is now open. The yen still below 149.50. Since we had the CPI news at 8:30 this morning, we'll see how they're going to take that and which direction they're going. They're going to drive the dollar up or down. So far it's gone up from the report because it was at 149.15, so it's gone up 30 pips before the exchange opened. So will they continue that? The pound dollar, there was your 1 hour sell signal. There was your chance to get in up here, and now you've made your money. You took off half your position. That's just me though, taking it off. That's what I do. You're welcome to do whatever makes you feel comfortable, whether it's an eighth, a fourth, a third, or 3/4. Leave that up to you. But it takes the stress off. Now you have no stress. You get in, that's a low risk trade. That high is 123.37 basically, and that high is 31. So $6 plus the $3 for the spread, $9. A Big Mac combo meal is what you were risking today. That's it. And there's your reward. So you've took off half the position and you've made money. Stress is now gone. You're still in the trade because you got the other half, but now you manage it. That's what you have to do the rest of the day. Is when it makes this poke down. Now your initial, if you got in there, that was your stop initially. After this happens, now you've moved your stop to break even. Maybe even put a couple of pips on it. And because it made a monster candle and it's pushed down more, you can actually move this stop from there to that high. And now that's made more money. Now you just want a continued push because these candles are getting bigger. There's going to be a retracement. So you have to be careful on that. So when it's coming down to resistance down here, you could look at taking the other half off from that entry down to here. So the second half made more money than the first half, which is what you want. Or you can still keep moving your stop down because that's going to make money. Right now you've made money. Stress is off. You're still in the trade, which is what you want. Don't have to look for another trade. Like most other traders who are 1, 3, and 5 minute, some 15 minute, constantly got to get in, get out, and they get 8 to 10 pips, if that much. And you say, where do I get those numbers? All you got to do is go to whoever your brokerage houses are, look on their website. That's what they say. The average Trader Joe, which is me and you, take 8 to 10 pips per trade. I don't do that. Depending on what currency it is, my first half of position is took off like the pound is going to be 40. And I got the rest of the half. Now it's making money. That's going to be over $100 just for this one trade. And if it continues pushing down tomorrow, that becomes greater. There's no reason to get in that. You don't have to worry about getting anything anywhere else. But we are at the daily range for today. We're getting close to it. I can go a little bit beyond it like it did here. That was the daily range for that day, and it poked up a little bit. Didn't go up to that green as it went right up into there, and we fell off. So could there be down to here and then turn around? I'm looking for a turnaround. Not all the way back up, but retracement to give the big boys an opportunity to say, yeah, we don't want to sell here. The average Trader Joe does. And they try to get their measly little 8 to 10 pips. You know how many trades you got to get to make money every day to be able to pay bills? You got to be right every single time on that little amount. Because if you're taking 8 to 10 pips that I've seen on there on the internet, the traders, where their stop is 3 times greater than what the reward is. It should be the other way around. Your risk to reward, mine are anywhere from 2 to 6 risk to reward, depending on what currency it is. And it relieves the stress when this happens. You're able to take your money off. You really don't have no stress here anyway when you get in. It's $9. That was your risk. $9. A Big Mac combo meal. And then here's your reward for being patient. Now when that signal shows up, you don't take the buy. You have to wait for the setup. And it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 hours. Almost another day you had to wait. And most traders can't wait. They feel like they have to make money today and tomorrow. And they have to make so many trades to be able to make so much, because some of them have an amount. I need to make $100 today. I need to make $500 today. And so they force trades. And the risk to reward becomes lopsided. Now that goes against you. Because when you get out for 8 to 10 pips, it can retrace that. See all these? It can retrace that in these candles. And you got stopped out. And you're waiting on this. That's what you're waiting on. But we're getting down here to some support, or there could be a retracement before it goes lower. So you have to monitor the second half of your position in. You should be in stop right there now, because now it's made money. You're just hoping that it's going to continue down where you can bring it down, but that's a big old candle, and this is making a big candle too. So knowing there's going to be a retracement, and it's up to you what you want to do. If you want to take it off down here at support, which could give the potential to turn around, or if you want to leave it there and ride it out and see what happens. That may just come back up in here and it won't stop you out, and then it'll continue down. None of us have a crystal ball. Wish we did, but we don't. But that's how this works. That's why every trader's different. You have to look at that. See, we're on support now for the New Zealand yen. So I need to keep an eye out on the dollar yen. And since the exchange is open, they have not really pushed it up or down. It's gone sideways, and it's been open for 7 minutes. Yeah, if this, I do swing trading. If that's not for you, because there's not a trade set up every day, then you're welcome to look. You won't hurt my feelings. There is plenty of traders on the internet that do 1, 3, 5, 15 minute, and they're in and out all day long while they're on. And I'll give you another heads up for those of you who don't know. I'm sure if you've been on there and you've seen these traders that's on there, they'll have on their screen wins and losses. Now that could be for the day, for the week, for the month, or even the year. That's very deceiving, because it doesn't show the pips. How many pips did you got? Then you're able to divide. Once you find that out, you're able to divide that into the amount of trades that they had, and then average it. And I guarantee you that most of them is going to be anywhere from 8 to 10 pips when you break the math down. So they can have a winning record, which, you know, apparently a lot of them do on there. You know, if they've had 50 trades so far in the month, let's give an example that they've done pretty good. They did 35 wins out of 50 trades. They had 10 losses and 5 break-evens. Well, if you look on that page, you're going to think, oh, I need to follow this guy. That's a good percentage. He wins twice as much as he loses. But the key is, how many pips did they get? The total pips do they have for those trades, which a majority of them do not post. Because if you get those numbers, then you're able to divide it up into the 50 trades, and it gives you the average of what they make per trade. Now, I can have 10 straight losing trades. 10 in a row, if I wanted to post that up. And then I have one winning trade, like my Euro New Zealand. So I had 11 trades overall, 1 winner, 10 losers. And if you come to my YouTube channel, you're going to look at that and say, well, this guy's a loser. I don't want to follow him. Let me find the next guy. But when you have my risk to reward is, I'll have anywhere from 15, maybe 20, down to as low as 4.5. That's the lowest I've ever had as a risk to reward. And I've had them as high as 24. 30 is my limit, but I've never had a 30. But the highest I've had was $24 risk. That's when I say 24, that's the dollar risk on the trade. So let's say I had on average, because that's going to be varied from 4.5 to 24, let's split the difference and do, let's say, to make the numbers good, 15. I had a risk of $15 every trade. 10 losing trades. So that's $150 loss. Now, this trade right here that I got in, because it's Euro New Zealand, I'm taking it off at $50 or $60. My first half, just the first half, depending on the range for the day. This one was 60 because it hadn't got the daily range, so I could move it up from 50 to 60. So the first half got 60, and the second half I took it off when it got up to here. Why? You say, why? I took the rest of the position off because it could go higher. Yep, it can go higher, but look what it's done when it's hit the resistance here. So this trade went from here, I didn't get the exact number, I got actually 49, 175.49. Went from 175.49 to 177, that's 160. Plus 60, $220. So you see what I'm talking about. I had one trade which wiped out all 10 of my losses, which could have been in a row, 10 in a row. And I still have a profit. But if I don't post that, you're never going to see it. That's why you have to look at those other traders. Do they post how many pips they got? If they just do wins and losses, that is very deceiving, because you don't know what they're doing. What is their risk to reward? They get in with a stop loss, but then when they get to the 8 to 10 pips, they move it immediately to break even, to where that's what they can get. And it can easily, in a 1 hour candle, come back and stop them out and do this. So you can't have, in swing trading, you can't have a tight stop. You initially want to have a tight stop, which is a risk like that. And then as it moves up, see, when it makes this push up, I can't move my stop. Stop initially is right here on the entry on this candle. And I can't move it for 1, 2, 3, 4, 5, 6 hours. I can't move it for 6 hours when it makes that push up. Now I can move it under the low of this candle or this candle. So now I have gone from being here to being an entry on that candle, and if I move it up into here or even that candle, now the second half makes money after the first half got taken off. Takes the stress off, you've banked money, and you're still in the trade. You don't have to hunt for another trade. Unless it happens to pull back down in here, then you can add to the position with still a low risk trade. Now there's going to be a retracement on this. I don't know if it's going to be today, tonight, or during Europe session, but it's coming because there's been no retracement. So plus that's daily resistance, extreme resistance, and that yellow line right there is a yearly, not a daily, not a weekly, not a monthly, a yearly resistance. See what happened? Went up and touched it, they drove it down. So when it got close up into here, that daily range had stretched. It was almost at it. So there was no reason for me to hang on to it. Now if I want to get back in it, I can look for a retracement, maybe back down into here, depending on where the trade better would be down into here. But that won't happen today. So you have to sit and wait on these trades to set up. So we're going to look at the New Zealand yen. See, there was the sell. This is a 4 hour. The 4 hour came down, tried to run away. There was your opportunity to get in. There's your reward. It's came back up. It does this a lot too. Comes back up to it. You actually got a little bit better price for a sell. And now here we go. This is a 4 hour. So now you've banked money again and you're moving your stop down. But you have to wait on these. I see when that sell signal shows up, you got 1, 2, 3, 4 going into 5 hours. You have to wait. You have to wait. Can't do anything. And you're not getting rewarded if you got in there or there or there or right here. You're not getting rewarded until 7, 8 hours, 9 hours later. So again, you got to be patient. But because most people got to make money today, right now, they have a goal they have to reach, so they have to make so many trades. You get at the point where you're forcing trades because you got to reach that goal. let's see, if I posted my percentage, which is on that example, if I had 11 trades, 1 winner, 10 losers, you think anybody's going to stay on that channel? Because that's what they're going to see. But it's deceiving. Ask the people who are running it, how many pips did you get? Do you have total for all your trades? Then break it down into all the trades. They had 50 trades. They had 400 pips. Guess what? They got 8 pips on average per trade, which is correct with what the brokerage houses say that the average trader takes 8 to 10 pips every trade. I'd rather wait on this. I'd rather wait on this. Then I'm going to get paid. And a lot more than what they're making. They're continuing to have to find trades to get in all the time. I have to be patient when it sets up. Now the signal don't set up all the time. That has to set up. When it sets up, then I wait for the retracement. Sometimes it runs away. There's nothing you can do about it. You just go to the next one. Now let's see if I can find one on here that ran away. It didn't give us a chance. I know it's a while back. The New Zealand yen. That should be getting close to it, hopefully, before the... There it is. See how it ran away? Ran away. You couldn't get in. Nothing you can do. You have to wait for a retracement. So we're waiting for the retracement. And there it is. There's the low risk trade. Well, did you look how long you had to wait? That's why you have to look at these every day. And you go back and see where, let's squeeze it. I think, was it this way? I squeeze it. But now is it squeezed in? Or am I still having to scroll? Oh, did I go past it? Did I go past it? Nope, there it was. Right there. But that was a long... Now these are 4-hour candles, so you're talking about a month or longer to wait for it to come back into it, and then you got rewarded. And you could have been in it until we show up here, and then you see what happened. Now that big monstrous candle right there was the last Wednesday, which has been 8 days ago. That's 8 days worth of trading. Is the Bank of Japan stepped in right there. So for those of you who don't know, I'm recording this. So anything you miss, you'll be able to go back and watch. See, we're back at the yearly support. See, that's the yearly, right? That thick yellow line. Closed above it, went up a lot higher. This is 4 hours, so that's actually a big move. Come back, retested it, went sideways a little bit, and then crashed down below it. And we come up, closed above it, went sideways, gone up a good bit, come back down. Are we going to crash like we did here below it? Right now we're in sell mode because it retraced back up to where it sold from. And there's no buy signal yet. So will we come back down in here? This is a 4 hour. This will take a long time. So I would suspect that it's going to fill in most of that wick. So it could look for a buy opportunity down in here. Hopefully it's going to come lower than that. It might not. That would be a... If it doesn't, and it comes down just into here, then you can have a low risk trade with that with your stop, because that's a big gap right there. Because if it takes that out, there's no need to wait all the way down to that, because this is a 4 hour chart. So that's probably $80 to $100 risk by waiting. When you get out, save that money and then wait for the trade, the real trade. So we'll see if the New York session, there's no other news besides the oil coming out. The pound The dollar yen is still hovering just a little bit below 149.50. Nothing to do. They're not driving it up or down. But the news was strong for the dollar. That's why the pound dollar sold off and the Aussie dollar sold off. Let's see, here's another example. There's your sell signal. It was at that daily range. Went right up to it, sold off. The signal showed up. There was the poke up to get in. That risk was 64.45. That is 34, so that was basically about a $14 risk right there. It was a $16 risk if you got in on that candle, and now you've banked your money. And you're moving your stop, and it's still going down. So now we're above 149.50. I'll add to the position at the 149.90s to the short on the dollar yen if it gets up there today. May not have until tomorrow or next week. Euro New Zealand, it's gone sideways. The pound CAD is sold off. See if we can squeeze that in on the 1 hour. There was the sell. It's come back up to it. Low risk trade. You get in. You banked your money, but you had to been patient. There was no reason to trade this. You could have traded it when it got up there. You could have went low risk when it pushed up there, and it sold off. If there was no buy, even though that's a trend for a buy, because the U.S. The pound CAD had been a little of an uptrend till that happened. If you were in it, this should be your stop. Pound CAD, the high of that 1 hour candle, shouldn't take that out. May have a retrace up into it. But when you get in initially, if you got in there in any one of those 4 candles, that's your stop right there. Now that you've got this, you've moved your stop from up there down to here. And you could even move it. I don't think it's going to take that one out. You could even move it to that high. So you moved your stop initially from there to there to there. So now you've made first half position money. The second half is going to make money no matter what happens. No matter what. So you're either going to make some money or you're going to make more money if it continues pushing down. So I think that's plenty of examples. You get the gist of the idea of how I trade swing trade. You have to be patient. Trades don't set up every day. The majority of the traders can't wait. They have to make money every day. And they want to be entertained as well. I'm about trading. I want to go to a channel where they train you, teach you, they make money. Because if it's me, and this is just me, I can get entertaining anywhere. I want people who are making money, that are doing it from home. That's their full-time job, or actually it's part-time for me, because I do use 1 and 4 hour candles. So having to wait 16, 20 hours, I got time to go places, do whatever I want to, and not have to rush back. Especially after the news has already come out for the day. So dollar yen pushing up toward 149.60, but I'm not doing anything until it gets into the 90s, and then I'll add a position short. So what's the pound yen doing? It's coming down. Let's switch to the 1 hour. It's on the 4 hour. There's the 1 hour. There's the sell signal. And there's your opportunity to get in. You had to wait almost 3 hours, 2.5, to get in, but now you got paid. But it took from that signal to 3, 6, 7, 8, 9, 10, 11 hours to get in and get paid. So that's basically a half a day. And there would have been a trading opportunity in there, and most traders would be forcing trades because they've got to trade. And let's see, did I miss something right there? Yeah, I think this is going to be, there could be a retracement up in here, which would give us, and probably around lunchtime, probably about the time Europe closes, a retracement, and then it'll continue. That yellow line right there, the thick one all the way across, that is a yearly pivot. So you see how important it is. Went up to it, stopped, sold off, back up to it, closed above it, went up, has come back down, tested it. Now are we going to blow through it to the downside, or is it going to go sideways and continue back up? So time will tell. So if you're not in this trade already, there's nothing to do. You have to wait for a retracement back up. But just realize on a retracement back up, it could continue higher and take out that high and go higher. So that's why you're stuck in no man's land. That's why you get in this trade, not this trade. Because now you've made money, the stress is gone. So with their Euro Aussie trade, it's trying to push up. It's getting up in here to resistance, so it can still go a little bit higher. Let's see, there was a buy opportunity. You probably didn't get in that. You could have got in one of these because this was a low risk trade. That low is 44. That low is 64. $20 plus the spread, which is about three and a half for me. So let's say $28 or $26 risk. You got paid half right in there, and you were able to move your stop at least to break even, or probably up underneath that after the push up, and that made money. Come back and stopped you out, but because now you got another low risk trade again, which that low is 66, that's 22 plus this, basically about $26 risk. So you have $2 more risk than what you had, and now here you go. But again, you had to wait. That's almost another whole day, like 20 something hours. You had to wait. So the average trader will see all this. They'll go, oh, I got to get in. I'm going to miss it. They'd have got a little bit. They're 8, 10, 12 pips, depending on what they've done. They might have got out there, and they got stopped out on the retracement. They missed that little bit, but then there's the pullback. That's your opportunity to get back in, because you're risking $26 on that one, $24 on that one. So if you can't afford to lose $24, $26, you don't need to be trading. Period. In a sentence. Stop trading yesterday. Just do demo till you learn how to trade. Be patient. Not force trades. Let it come to you. You're going to miss some. I do. I miss some. I don't get them all. So I got to see 4 hour look like. And it was still in a buy. See, you had no opportunity to get in. The risk on this trade would have been on a 4 hour. Now there was a chance on the 1 hour was better. Because this trade, the low was what I said was 18, and that low was 92. So that's 70 something pip. The risk, the reward is not right. Can't take that trade on the 4 hour, but it was on the 1 hour. But there's no sell just yet. But we're coming up to resistance up in here where it's failed. We're going to test it again. Now, will it fail or will it break through? We don't know. We just follow the chart. The chart tells us what to do. So I was trying to see my pound Aussie. Now I know that's higher than that. So what is that high? 66. Okay. Okay, so this is what I'm going to do. I was looking for a test of 193 close to it. We've got up to that. Okay, so I'm going to take I'm closing this position. I'm closing the pound Aussie that I had from back here over here. So I'd already taken off half the position and the rest of the position is gone. So that is 198. It's almost 180 pips the second half. The first half got 60. That's 240 pips. Now I had to wait, had to hang on to it overnight. These are 1 hour candles. So it's basically almost 2 days, day and a half. Had to wait to get paid. So now I'm done because it's coming up resistance. Now I got a feeling, see that's a pit, that's where it's coming, but there could be a retracement before it heads back up because this is at major resistance up here, and that's really big resistance right there. So it's approaching that, and because I've been in that from here, I could get a few more pips. I could. Let's see that. This usually shows me 193, which is where I was expecting it to go. 25, and I'm out at 70. I could get another 40 or 50 pips out of it. And that's maybe. And that's if it goes straight up. If it pulls back down, then that's a better move to go back up there. So if anybody got any questions, comments, please feel free. CAD Yen made a 1 hour sell signal. Nothing to do. You don't have to look at that again. It's got 56 minutes left on that candle. Nothing to do. Looking for a retracement on the Euro CAD and the pound CAD to get in short. Yep, looking for a retracement. Aussie Yen has made a poke down. So I'll be here probably for another 25 minutes. I'm usually on till 10:30, sometimes close to 11. Because then it becomes lunchtime here. Europe closes close to lunchtime here in the US. The volume dies off. It becomes harder to trade. The trades have usually happened. Of course, I'm taking off stuff today. Pound Aussie, Euro New Zealand, both of those are taken off. Pound CAD was taken off yesterday. So see, I got paid. Euro CAD was taken off yesterday. Let me show you why I got into that. Oh, got to squeeze it in. the gap from Sunday night. This is a 1 hour candle. The gap from Sunday night. I got in here looking for a gap fill, and when it filled the gap, I got out. And then it is sold off from the gap fill. Now I am looking to see, now once that candle showed it, you got the retracement, you could have got a sell. Let's see what that high is. 44.96. This high is 84.15 plus 3 on the spread. That's $18 risk, and you got paid big time. Now you probably had to hang on to it because that would have been on Sunday night. I mean Friday. Had have been on Friday. You'd had to overhold it over the weekend, and almost another day. Yeah, probably another day. And this is the same way. You would have had to hold on to it for a day, overnight, hang on to it for the rest of the day, and you got paid, and it's sold off. So there's going to be a retracement here. Going to be a retracement somewhere up into here on the Euro CAD, the pound CAD. And it's already starting. So if you're already in this trade, your stop should be at the high of that candle spike up right there, because if it takes that out, it's probably heading higher. Now the Euro CAD 4 hour, yeah, because if it takes that out, then chances are it's going up to there. But not today. It could be over the Asian session or even Europe session. But you have to be careful on that. But a retracement is your friend. It is your friend. I need to keep looking at the dollar yen. It is at in the 149.60s. So it's getting close. 30 something more pips. Actually been in the 70s, hasn't it? No, been up to 66. Yep, so about 30 something more pips. Can look to add to the short position on the pound yen. And as I double up the position, I do a full position, and then when it goes to 149.90s, I double up that position, because I did before 147.90s I started at, but we hadn't gone back down to that. But initially was on the first trade when the Bank of Japan stepped in and sold at 147.90s, 148.90s, 149.90s, and I doubled each of those. On this, because it didn't go down as far, I did the 148.90s, and then I'm going to do the 149.90s, and that will be doubled. And then have to wait on the Bank of Japan. Now that could take a couple days, week, couple weeks, month. But I'm willing to hang on to it. Now that money's tied up, yes, but I'm expecting another big reward, which I already had. And that's just on this one trade. See, again, I could give you the example, like what a lot of these traders have, where they have their wins and losses on their screen for the day, week, month, year. And I could have had 10 losses with a $15 risk for each one on average. Not always that. Sometimes less. That's what I look for, less. Sometimes it's a little bit more, but on average, say 15 for easy number purposes. It's a $150 loss. And then I would have that one Japanese dollar yen short. So I could have posted, okay, these are the trades I've had. I've had 11 trades, 1 winner, 10 losers, no break-evens, and people are going to turn away from my channel once they see that. But what they wouldn't see, for most, is that I had a $150 loss with those 10 trades total, but I had a almost $2,600 gain from my dollar yen. So I would be 1 win, 10 loss, and people would turn away because they would think, he's a loser, he's not an account, don't want to follow that guy. But yet I had a winning trade that wiped out all 10 of those losses and still gave me a ton of profit. I don't have them at that big because I was expecting that trade, just like I'm expecting this one. But that Euro New Zealand light could be the same thing. That was 200 and what was it, 240, 60, 280, something like that. Could have had 10 trades, all losers, $15 average, $150 all loss. Had the one Euro New Zealand, made $280. So I had 1 win, 10 losses, and again, people, if I just had that up there, they'd say he's a loser, go to the next guy, find another one. The record's terrible, but yet I made money. Wiped out the $150 plus $130 profit, and it's because I don't take, on average, an average trader takes 8 to 10 pips on each trade. So you can do the numbers for yourself. You don't have to believe me, and I advise you, don't believe me. Go check this out for yourself. Do the math. If they give you the number of pips, some of them won't. Because down here, or on a lot of them use Excel spreadsheets. You can manipulate those. If you have a demo account, you can have it down here. That can be manipulated as well. So just remember that. If they got a live account, it can't be. It can't be manipulated. But if you follow them and religiously, and you write down every trade that they made, or you take every trade that they made, and the losses too, because they're going to have them. And if you see the numbers are different, I mean, it's going to be a little bit different, a pip or two, because of, everybody's spread is different. That's where it's going to be different. Or you might have just a little bit of slippage, but there won't be much of a difference. Not enough to, to fight over. But when you see, several pips, 10, 20 difference, then you got to ask yourself, and you know that, wait a minute, that's not what that was. How did that get changed? So now you got to ask yourself, okay, are these guys really, really trading a live account? Or they just want subscribers and likes to where they can get paid and then eventually get advertising if they get enough. So they're not really trading. They're just trying to get you trapped to where you're tied to them. I don't want you tied to me. I want you to be able to learn how to trade, make money for yourself, make your own decisions. And then hopefully the rest will be history, so they say. That's my goal. And then all I ask in return is that you return the favor to somebody else. Once you make it, that's what I'm doing. I'm returning the favor. So that's what I would expect that you do when you get to the point where, hey, now I can work from home, I'm making good money, and get my wife home. I'm going to return the favor now. So let's see if there's anything out. Pound Aussie, pound dollar. Yep, there's going to be a retracement. There's going to be a retracement. So you've had two big old 1 hour candle sales now. So now, instead of having your stop here, now you got to decide how far down you want to move it, because you know there's a retracement coming, probably back up into here somewhere, or even closer up into here. So because that's a big move from there to here, now you got to move it a little bit, but you initially was up in here, so that second half of your position is going to make money no matter what. But that's your decision. Everybody's different. Everybody's going to trade a certain way. There is yeah, looking for the retracements. Looking for the retracements. Pound CAD is retracing now. Pound yen is retracing now. So that's what we want. See, the Euro New Zealand is right at the major resistance of all kind. That's the extreme daily range. That's a yearly pivot. We're up to it. So now what's going to happen? They're going to fight it out right in here, and it's going to go one way or another. So that's why I got out up in here. So these are parabolic SARs, those green dots. For you that may have a question about that, you can get those anywhere on your trading platform, whoever you use, MT4, Interactive Brokers, trading, any of those. That's a green moving average is an EMA. You can get that anywhere. These are trend following arrows. You may have to make a couple adjustments on the settings on those, but you can get those anywhere. So let's see, made the money on the Euro New Zealand, made the money on the pound CAD, made the money on the Euro CAD. All this week. Now I won't be here on Fridays. I don't trade on Fridays, but I do look at it, but I don't do live streaming, and I don't do a video. All I do is just look to see if I'm in a position still. Do I move the stop up, the target profit, and occasionally, not very often, occasionally there is a trade opportunity, so I look for that. But it takes 30-45 minutes, and then I'm done. I got the rest of the day to do whatever. Have a long weekend. But Monday through Thursday I'm here from 8 a.m. But I'm thinking about if I don't get enough subscribers, I know it takes a while, but if I don't get enough interested people, then I'm just kind of wasting my time, and I got other things I can be doing. Because most of the people that pop in, because you can see the views that are on here, and it's pretty big, but then they pop out, that tells me that they're needing more action. They need more action or entertaining or both. So I don't want those people. I want people that want to be able to learn to trade and make money and eventually be able to trade from home. And that becomes their business and their job, because this is my business. I would advise you strongly. This is what I do. I still do it. I've done it for almost 17 years. I print these charts off every single day, the 1 hour and the 4 hour, on each currency that I trade. And it's I think it's 16, if I'm not mistaken. 1, 2, 3, 4, 5, 14 currencies. So I print those off at the end of the day at the New York session close, and I write up if there was a trade. I write up on the sheet why I got in, where my stop was, and where my target profit was. First target profit was. If there was no trades, then I write on there was no trade setups today. And if it's a loser, same thing. If you got in the trade, you're going to be a loser, so you got to explain why you got in the trade, where your stop was. Even learning how to move the stop up, I write that down there, why I moved the stop up, if I moved the stop up that day. And you say, well, that's going to cost a lot of money, paper and ink especially, and I don't have a printer, so now I got to buy a printer. Well, yes, if this is going to become your business and you're going to trade full time, then that's a tax write-off. Now, granted, you're not going to get the money back right then. You're not going to get it back till the end of the year, and you're not going to get all of that back anyway. So you have to be willing to accept all that, but that's part of the business. Businesses spend money so they can make more money. So you have to have that same mentality. You can't look at it as I'm spending money. Yeah, you're spending money, but if you're trading the right way, you're going to make money so you can afford to do it. But that's how you're going to learn, by printing these charts off and writing on them every single day. And go back and look at them. And you won't need me as a teacher. Those print-offs are going to teach you everything that you need to know. On the weekends, you can go back and look at them over the week. And you're going to start seeing a pattern of where you're messing up and where you're correct. And you start eliminating the mistakes, and you start staying with the pattern of where you're making money and how you're making it. Money management is key. Risk to reward is key. So don't hunt for all these 1, 3, and 5 minute traders. Again, I say that because I've been there and done that. That's how I started. I'm trying to teach people, get away from that. They get 8 to 10 pips. It's stressful on top of it. And if you're working a full-time job, then you have to take your phone and look at it at work constantly, because you're trading such short-term time frame that you run the risk of, if you've got a company that frowns on you looking at your phone all the time, you increase your chances of getting fired. I wouldn't want that for nobody. When you swing trade, you don't have to do that, because they look at 1 and 4 hour charts, nothing less than those. And you don't have to look at your phone as often. You can actually, on your break, before you go into work, look at it. On your first break, look at it. Lunchtime, look at it. Your second break in the afternoon, look at it. And when you get off of work, look at it. And then when you get home. There's no chance of you getting fired for that. And plus now you're learning. But that's just basically swing trading. So don't force trades and wait on them. Yes, I'm going to miss some trades because they run away. I've showed y'all some. I'm recording this video so you can go back and look at them. Would have liked to got this trade. Would have liked to got that trade. New Zealand yen. I missed it. See, going up into that. Let's see what time that was. In the afternoon. On the 10th. Or even that time. I could have got, yeah, I'd have been up then, so I could have got that, and I'd be in this trade right now. But that's woulda, coulda, shoulda. Let's see if I had got into this trade, for example. I'm not, wished I would have, but I didn't. But it was in my time, Eastern time, where I would have been up. I should have seen it. And if I got in the trade, seeing this sell signal from back over here on September the 29th, and here you are on October the 11th, so that is 12 days you'd had to wait to get in, but now you're getting paid, and hopefully it's going lower. But you're in it, don't have to find a trade, you've already banked some money, and you're still in the trade for the second half, and you're just hoping for the push down into here, or here, probably right here. But that's still 4-hour chart. That's going to be some good money added to the second half of the position, which is what you want. But if I had got in this trade, print the chart off, 4-hour, say why did you get in the trade? This is where the entry was. Got in it because there was a sell signal from back on September the 29th. Write that down there. Low risk trade. How much would you be risking? And then today, at the end of the day, you'd be writing, print it off, and write the trade that you were in. You took half profit off, and you have moved your stop to initially been there, then it would have been there, probably be right here right now, because it's on support, so we're looking for some kind of either sideways or a little retracement back up. And it's at its daily range for the day. There's a lot going into that. You got to take all this stuff into consideration. It's not that you throw a dart at the wall and that's what you're going to do. You have to visually look at the charts and let it tell you. But we'd go to a 1 hour. Let's just say you was in this trade and you got in excuse me, either in there or there. You made your money, and now if you got in there, that was your initial stop. With this push down, then you got in there, break even, a couple dollars on it, push down even more. Now you should be probably back down into here. So now that's first half's made money, second half is going to make a little bit more money than the first half. And you could either take off right now, because see, we've closed below, on a 1 hour, we've closed below yearly support. Now will we turn around from here, go sideways? But we know something's going to happen right in here. And plus it's at its daily range. So plus you got a good bit. Let's say you got in 89.80, 89.80. It's been down to 88, basically 89, 90 pips. So on top of what you got already. So if you wanted to close that out, I mean, you're making pretty good money for the day. But you have to be patient. See, when that showed up, you can't get in for at least 2 hours, and you still had a chance to get in several hours later before it moved. So let's say you got in there, you had to wait 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 hours before it started moving. And a lot of people don't have the patience for that. So they go, I'm up 15 pips. Let me go ahead and take that. It's not doing anything. It could go against me, blah, blah, blah. Let the chart tell you what to do, where to move your stop, when to move your stop. You already got your risk. It's low risk. There's no need to tense up. You're not going to lose much money. Like I said, it's 89.77. 82, that can't be 77. 91, 82, $9 plus 3 of the spread, $12. You risk $12. There's no need to get nervous over that. You sit and wait. Yeah, so you got to wait 12 hours. But now you're getting rewarded several hours later. And don't have to hunt for another trade on this currency anyway. You don't have to hunt for another trade. Now if you still wanted to get in short, then don't do it here. Wait for the retracement to where there's a low risk trade again. Because more than likely if it takes this out, I mean you could get in even up into here. And if it takes that out, then there's a great chance that it's going higher and going up to resistance because it's off of support, and it could push up higher into here, take all that stuff out. But the chart's going to tell you what to do. Don't listen to me to tell you what to do. Let the chart tell you what to do. So that's where there's all kinds of here, and that's going to be it for today. I think you've been able to see what I do. The Aussie dollar's continually down, so there's going to be, let's squeeze it in, an opportunity. Let's switch it to 4 hour. Down here, somewhere down into here is where we're expecting it to drop to give us a buy opportunity. Now let's see if I can squeeze this over. You see where it's been to, there should be a sell back over here. Been up there 3 times almost. So it's got to be fairly close to where the sell signal is. There it is. Okay, now in the 4 hour, it ran away. It didn't give you a chance to get in. That first poke up is way too far away. The risk is too great. So that was on July the 14th. So let's see if we can see on a 1 hour. I don't know that that's going to let me scroll back that far. May have to squeeze it in a little bit more. Nope, wrong way. So that's it right there. So this could be a retracement. There was a sell on, this is a 1 hour. See, we've not retraced this. I'm expecting the Aussie dollar at some point, this could be next year before it goes up into here and gives us a sell opportunity. But there was a sell opportunity after a buy. See, there you had a 1 hour buy. There is your pullback. There's your buy. Look at that. Now that's 1 hour. Now that's probably 2 days right there. You had to sit and wait in it. From the signal, it's probably a little bit more than 2 days. So you have to be patient. Pull in, low risk trade. There's your reward. Buy signal. Signal shows up. The poke down right there, low risk trade, or even that one, either one. Could have got in twice if you wanted. But it took, 6, 7, 8 hours. You had to wait. Couldn't get in. You just have to remember this. That's why you have to look at the charts all the time. And then your reward. Sell signal. You have to wait. There's your poke up, your low risk trade, and you're rewarded. Now we're looking hopefully for an opportunity back down into here. That's not going to happen today. But if this is going to push back up and we're going back up to here, then this is just going to be a small retracement. And there is, looks like there's support right around all in here, which is about where we're at. So this might not go down much more. With all those, you're expecting some kind of retracement back up. So you gotta keep an eye out for this stuff by looking at the charts. CAD yen made a 1 hour sell signal. There's no setup there. That signal was 2 hours ago. So you're still waiting. Nothing to do on it. Pound yen. Made a little retracement up. Need to look. It's in a sell 4 hour. Okay, I've kind of gone over these far enough. For those of you that's maybe first time in here, I'll go over this one more time. I do live streaming. I've been a little over 2 weeks now. Live streaming every day, Monday through Thursday, 8 a.m. till 10:30, 11 a.m. Eastern Time, U.S. If you like the channel, please hit the subscribe button and the like. But also, if you want to be notified of when I'm on live, you also have to first click the subscribe button. Then you also have to click on the notify me, and then you'll be notified by a pop-up message from YouTube that I'm on live stream now. It makes it easy to get on there. So I hope everybody's learned something today. If you're in trades, please use good money management. Take off the profit targets wherever you feel comfortable to bank some money. Take the stress off. And I won't be here tomorrow, but I will have this recording. Would be up probably in about 3 hours. So I hope everybody has a great weekend. If you have questions, comments, feel free to go on my YouTube channel, comment section there. I have the Gmail in there too. You're welcome to send to that, and I'll answer it as quickly as I can, which is usually pretty quick. If it's in the U.S., if it's in overseas, and it's going to be, because of the time difference, it'll probably be half a day later almost, depending on where you're at. But I will answer them. Thank you all for the subscribers that I do have. I appreciate that very much, but that's not what I'm all about. I'm not trying to get a ton of those, but I just want you to be able to subscribe. So if you want to watch me live, then you'll be able to, but you have to subscribe to do that. So hope you guys all have a great weekend, and we will see you on Monday.